Hello, everyone. My guest today is Steen. He was instrumental in leading the product sales, marketing, and business development efforts for Jan Rain, taking them from early stage rapid growth phases to becoming the recognized leader in the social identity space with a full user management platform and global enterprise customers. Today, he's leading CrowdStreet, an online syndication platform for commercial real estate. Tor, you ready to take us to the top?
Yes. Hi, Nathan. How are you doing?
I am well. All right. So start off first here with the business model. Then we'll get into the kind of X's and O's of what you do. So is this a pure play SaaS model or do you monetize a different way?
Yeah, it's actually more of a marketplace model, but there is kind of a subscription model associated to it. And kind of, again, back to the origin at CrowdStreet was really to transform investing in commercial real estate, right? Make it different than the way it's been done before. So new pricing models, new revenue models.
I love that. Before I move forward, can you try and quantify that? So if you look at your total revenue past 12 months, what % would you say is SaaS versus marketplace or some other form?
Yeah, it breaks down about 80% marketplace, 20% SaaS.
Okay, fair enough. All right, let's get more of the backstory here. When did the company launch?
2013 formed, and we launched the marketplace in 2014, and we launched the SaaS in 2015.
Okay, now were you there from day one? You're the founder?
Yeah, I'm the co-founder. Darren Powderly is my other founder. He's the real estate guy. I'm the internet and software guy, the tech guy.
I love that. Okay, so I mean, how did you guys come across the idea?
Yeah, I mean, really, Darren had worked with commercial real estate firms who were trying to raise capital for their projects, and they were always confined to their geographic region and sphere of influence on investors, right? The kind of high net worth investors, call it the country club model, right? And then on the flip side, I kind of saw it from a personal perspective. As a technology executive, I didn't have access to invest in commercial real estate. I didn't know the developers. I wasn't hanging out on the golf course, right? So the two of us kind of came together with the concept of how can we benefit both sides? How can we give commercial real estate developers and operators more access to investors across the country, and at the same time give great accredited investors more access and transparency to the third largest asset type in our country, commercial real estate. So that was really the idea. And again, you move it online, you hopefully reduce friction, you open transparency, and you provide greater distribution, and both sides win.
Give me some snapshots today. Total capital raised for the platform.
So yeah, total capital raised since inception, a little over $700 million.
Investor distributions.
What's that?
Investor distributions on that?
Yeah, so investors have received over $70 million in distributions.
Okay, so what effective IRR? You're talking like 25-ish?
Yeah, exactly.
That's interesting. Okay, now with these businesses, I've interviewed a bunch of folks kind of, I'm going to call you fintech, but you're real estate fintech. You have Cabbage, $7 billion loan book, a lot of companies like this in different sectors. And the hardest part to build is the first 10 million of the loan book, right? So in terms of your true cost of capital, usually people call it like the mafia round. How did you guys raise the first 5 million or 10 million for you to then deploy through the platform?
Yeah, I did it, I think, a traditional way. Friends and family, right? Started there. That was the first 250,000, right? Just, because they know you well enough, they're going to actually invest in you as a person. And then I was actually fortunate to meet a fintech focused VC down in the Bay Area that does only early stage. And so that helped us they came in for a little bit more institutional seed round to get us to 1.3 million in seed. And that was in October of 14. So we closed that first round. So that kind of helped us kind of at least build the initial team, start getting some sponsors on the marketplace, start building the technology as well, the platform. And then really the A round, that remaining kind of sub 5 million, the $3.5 million range, that was through a traditional VC down in Silicon Valley. So Rally Ventures, again, does kind of traditional A round. They love the fact that we were kind of this up and coming marketplace and also had a SaaS model to it as well.
What total capital raised to date on the equity side?
Yeah, we've raised $13 million for the company. So it's very, very capital efficient business at this point.
When you did the 3.5 with Rally, what was your total outstanding loan book? What was the size?
Oh, gosh, we were in terms of what we've done on the marketplace.
Yeah. How much had actually investors put in and you lent out?
I mean, we were probably only 25 million had been done on the marketplace. And the reason that number stands out, just a fun fact, Nathan, is yesterday we celebrated a big success, a big raise on the marketplace. And I said, look, what we did this week is more than we did in the first 2 years. So, that's the beauty of that flywheel, right, of a marketplace once it starts to build trust and between both sides.
So let me just repeat this back to you to make sure I get the timing right. $25 million loan book in 2016 when you did the $3.5 million equity round with Rally. Okay,
Yeah.
so you answered my question on how you got your early equity, but what I was actually asking is actually getting the people loaning you the money at cheaper rates than what you're lending it out, so you get a spread. That's sometimes the hardest part. So where did your first dollars, not your equity dollars, your first kind of debt fund dollars come from?
Oh, you mean for the marketplace itself?
Correct.
Yeah, so we're unique in that we grew it organically. So we didn't actually take balance sheet capital to invest onto the marketplace. We actually felt like if we're going to build kind of a trusted marketplace, we don't want to go buy deals, right? In essence. So what we wanted to do was go take our time on finding really good deals, really good sponsors, the supply side of the marketplace. And then at the same time, kind of try and keep the demand and supply in kind of an equilibrium.
No, I think that's great. So in 2014, that first 12 months in business, do you remember how much you had raised on the debt side again from investors saying, yeah, I want to do a loan through you?
Yeah, and really it's more they're investing equity as opposed to the debt side. I mean, there are some players that do debt, Nathan, but they're investing on the equity portion of these deals, which has nice upside, as opposed to debt, which is usually a fixed return. And so really in that first 12 months, we'd only raised about, kind of $10 million on the marketplace.
I want to track this growth. We already know 2016 was 25 million. What did 2015 end at?
Oh, 2015, it was like, again, $15-16 million. It was pretty, between 14 and 16, it was, I don't want to say it was negligible, but it was at least proving that this market that you could actually take commercial real estate investing and move it online.
So from 2016 to today, you went from 25 million in essentially loans out to 700 million. So let's just keep going year by year. 2016 was 25 million. What was 2017?
2017 was 130 million.
Okay, I'd say that's pretty significant growth, almost 6xing the 25 million in the prior year. Did something special happen there? Did you land one big investor or something?
Well, what we had seen was really an inflection point. It was interesting. It was July of 16. I remember we looked around, there were probably like 18 of us in the company. We were in one big room, right? A startup. And we kind of looked at each other. We've hit an inflection point because we'd seen 3 months of kind of steady new supply coming on the marketplace. We'd seen a steady, nice growth of our investors coming on the marketplace and repeat investors, right? Investors now that were putting in their third or fourth or 10th investment into CrowdStreet marketplace deals. So I think what had happened is we'd finally, by the middle of 16, hit that inflection point where it had been proven and larger sponsors were now coming onto the marketplace. And so we started to build more of a demand, the investor side, the consumer side of the marketplace. So really by 17, it was really ready to take off. And in 18, we did 250 million of equity on the marketplace in 18.
That's great. Okay. Let's jump in. Let's just shift just the SaaS portion of the business for a second. So who is paying you? The builder, the developer, or the person lending the money or investing the money?
Yeah, the developer, because we white label our software and we license it to the developer.
Okay, so what is I'm sure you have a ton of customer cohorts, but we don't have time to talk about all of them. The average developer is going to pay you what per month or per year to use your platform?
It's an annual subscription. It's right around $20,000 to $25,000 is kind of where they fall in. So it's not an exorbitant expense, but it is a capital budget.
And when did so 2014, you start writing the code for this thing. When did you get your first dollar of revenue on the SaaS side?
The SaaS side was in 2015.
Okay, so about a year of investing in the MVP. Do you remember how much cash you guys sunk into the MVP before your first dollar of revenue?
Yeah, I would say it was probably a couple $100,000 worth of pure engineering product development that went into that MVP.
That's not bad. Okay, so your first developer comes on in 2015. How many are you working with now today?
We've got over 200 commercial real estate developers using our platform.
Okay, and so can I take 200 times that, essentially $2,000 a month? You guys are doing north of $400,000 a month, or about $5 million in ARR just on the SaaS side of your business.
Correct. Yep.
Okay, I mean, that's pretty healthy. And you said earlier that's 20% of your business. So if we multiply by 5, right, that obviously takes you to 20 million in terms of total run rate.
We're on that rate. Yep.
Where if you're at that today, and let's just talk about SaaS here for a second, you're $400,000 a month today. Where were you a year ago? Do you remember?
Oh, we were at least probably half of that. Yeah.
Oh, okay, good. Now, did that growth come from developers, the same set, spending more with you, or was it new onboarding, new logos altogether?
Yeah, I mean, it's interesting because we built the SaaS, Nathan, really as a way to help developers come online, right? So we recognized in 14, as I was espousing a marketplace to these commercial real estate developers, Many of them were like, I don't speak your language. Again, they're 20 years behind in using technology, because I would say, how are you managing your investors today? And they'd say, well, I use spreadsheets, right? And I go, oh, timeout. I could license your technology and manage my own investors. So we built the SaaS, and we developed the SaaS part of our business as kind of a tip of the arrow, right? To help these developers manage their own investors. And then it was easier for them to say, wow, okay, I understand the value of your marketplace. Now maybe I'll start putting deals on your marketplace. So I like to bring that up, because the SaaS is a kind of an ability to help these developers in what they're doing today, which is they could be managing a couple hundred high net worth investors and millions of dollars that they're raising capital and managing investors. But then, our marketplace gives them that expandable set of investors, right? Beyond this, their own close net. So they go hand in hand. And so the way we actually look at it is how many sponsors that start on our SaaS developers go also to our marketplace. And we have about a 40% crossover. So
what does that mean? Developers who make money then go and invest on the other side?
Exactly. They use our software to manage their own investors. They're used to doing a kind of a private offering where they raise capital from kind of a small net. So they'll go from using our SaaS solution to manage on their own website with their own investors to then actually saying, I want to put a project on CrowdStreet. So the way we look at it is we're gaining new logos through our SaaS solution, which then also crosses over to them using our marketplace.
Interesting. Okay. Now let's talk about the other part of your business, the 80% of your revenue coming from marketplace. If you have about 700 million outstanding and you're doing about 20 million on that part of your business, again, 80% of your total revenue, that works out to about, 2.8% ish. Are you actually generating effective IRRs of like 29%? You're keeping about 3% and the investors get 25%?
Yeah, and the IRR is a little challenging, right? Because, if you took all the deals that we've done, about 330 deals have gone on the marketplace, and you took the average targeted IRR, it works out to about 18%.
Okay.
So the realized IRR, as we know, realized versus unrealized, like what's on paper versus what's really kind of come in. So the realized IRR is actually what you were saying in the upper 20s, right? Because those are deals that, have gotten many times an offer they couldn't refuse earlier than they anticipated it selling, or they were a ground up development where they knew they would sell it within 2 years. So we've had 17 realized offerings so far, and that's where we have the upper 20s or mid 20s IRR. But if you kind of look across all the deals, those that are still distributing cash on an ongoing basis, it's kind of a blended 18% IRR across the entire platform.
Okay. And is that your model though? Do you tell investors when they give you $100,000, hey, we're going to pay you back a target of this IRR, but we're keeping a 3% or 300 points on that? Or like, what's your marketplace revenue coming from?
Yeah, so we're really clear with investors. We like to tell investors that, look, there's a self-serve marketplace in one regard. So any accredited investor can come on and as low as $25,000, they can invest in these deals. We don't charge that. I'll call it the do-it-yourself investor any fee, right? Sponsors are paying us a technology fee to be able to put their deal on our marketplace. And they know that we're helping digitize their offering. And we've gone out and done all the hard work to go find accredited investors. So it's really the sponsor that pays us for that kind of self-serve investor that wants to invest their own. We've now added 2 other services for investors. We have a series of our CrowdStreet funds that is kind of like, we call it the blended portfolio. And it allows an investor to put it into a CrowdStreet instrument that then invests across 30 deals over a 12-month period on our marketplace, giving investors a kind of a diversified pool of investments. And our third offering for investors, now they do pay a 1% fee for that because it's a traditional fund structure.
And how much is under management under that vehicle?
Yeah, exactly. 1% of assets under management.
How much is that? Yeah. How much is under management on that vehicle?
Already in 6 months, we've seen $27 million on that fund alone and 600 investors. So it's pretty significant growth. And our third offering is our advisory service. So we have a private advisory service. So investors that do want kind of, I'll call it the white glove, kind of approach, they can come in and we'll actually create a custom portfolio. We have registered investment advisors on the team there. And they're able to construct a portfolio specifically for that client over the years in terms of where they put their capital onto the marketplace. And it's about a 2% fee for that because it's a higher touch, service.
So just to summarize, your total revenue call at 20 million this year is hopefully what you'll hit that this year, you think, or you already passed that last year?
Yeah, we'll be on that run rate. Yeah,
okay.
We're on that run rate right now.
Okay. And what'd you finish last year at total?
9.2 million.
Really impressive growth. So of the 20 you're going to do this year, just to be clear, again, 80% of that's going to come from the 3 products you just mentioned, some combination of fees or developer sponsored, et cetera. The other 20% is coming from the SaaS fee, developers paying $25,000 ACVs.
Yep.
That's great. Okay, let's double down and wrap up here with just some SaaS questions. Churn's critical in a SaaS company. What's your churn, again, just on the SaaS side of your business?
Yeah, so right now we're at a 96% renewal rate. So it's only 4%. Yeah.
Pretty good. Do you have expansion revenue on those cohorts that more than makes up the 4% loss?
Yeah, so we actually do see on a revenue basis, we're actually over last quarter over 100% on the renewals because they're buying, those are staying or buying more.
Upgrading. What does it cost you fully weighted to get a new $25,000 ACV account?
Oh, it's $10,000.
Okay, so you got a 6-month payback period. You're happy with that?
Yep.
Yeah. Okay, very cool. Team size today, how many folks?
75.
Oh, wow. What's the breakdown? Engineers versus salespeople?
Yeah, engineers of the 75, we have 11 in engineering. So good amount. Salespeople, we've got 16 salespeople, both inside and outside. We've got people in the field, key markets. And then we have an investments team. As you can imagine with a marketplace, we have to have a team that is experts on screening deals, right? Screening sponsors. So we've got a 10-person investments team as well.
When a sales rep is fully onboarded, what are you setting their quota at typically?
Yeah, it's close to $3 million.
And did you pick that based off a profitability target? Like you want 5x profitability per salesperson when they look at their fully earned comp?
Well, we like to look at it also more based on what's the total productivity that they can actually achieve. I mean, I always kind of come down to how many units could they actually sell of the marketplace and the SaaS, at an average ASP. So really kind of a bottoms up to really look at productivity.
And you mentioned 13 million in the company on the equity side to date. When was the last raise?
It was July of 2018.
Okay, so you're raising right now.
Not right now.
Let me ask a different question. Are you back to break even right now, or are you still burning some capital?
We're burning some capital, but it's very capital efficient. So I wouldn't say we're at a break even, but we aren't far off.
Okay.
So
you're talking like 10 grand a month or 100 grand a month or?
Yeah, it's about 100 grand a month.
Okay,
so
that's fine. Yeah, I was going to say, 100 grand a month on, call it 5, 6, 7, 800 grand a month is fine EBITDA margins. In all seriousness though, usually you see folks raise when they're on the VC track every 16 to 18 months. So if you do raise and, call it Q4 or Q1 2020, what would be the right amount to raise and how would you think about that?
Yeah, it would really be the growth round. The last round was an $8 million round. It would most likely be kind of 15 to 20 million. It would really be our hopefully probably our last, but a real growth round.
Do you think you can get up to kind of 100 million pre-money?
Oh yeah.
Yeah, I was about to say, I don't know how, and I'm a SaaS guy, so I don't know how your kinds of investors would value the 80% of revenue you're getting from the marketplace. Mm-hmm. That's good. Okay.
Yeah, I think they look at it through, obviously there's the revenue, but there's also kind of the value of the accredited investors, the value of kind of the customer base, and value of kind of what there's an intrinsic value in a marketplace, right? That's hard to put a number on in terms of the network effect that you can, that you start to see.
So, let me try and quantify that here for a second. If Steve Roth and Renato comes and said, hey, we'd love to buy this thing for, $250 million, call it $250 million, do you sell?
That's a pretty low ball offer.
You said that with a pretty straight face. I would consider that very high. That is what is that? 5, 10, that's like a 10, 15x. That's pretty healthy.
The reason I say it is because I guess we don't have that in mind right now. We look at what we're doing already and we say we're excited about, again, we'll do 500 million on the marketplace this year. So just to put that in context, in the first kind of 5 years of CrowdStreet, we raised 500 million on the marketplace. This year alone, we'll do 500 million. What's really possible in this industry, because there's about 250 billion of equity in commercial real estate every year. We're still it's great growth, but I just look at the upside, Nathan, and I'd almost be kind of disappointed. Well, yes, 250 would be a nice offer. I'd be almost disappointed to kind of get out at this point with how much opportunity is still ahead of us. Right?
200 developers on the supply side. How many investors have put in at least call it $1 on the investor side over your history?
Yeah, so we have over 5,000 accredited investors, growing by at least 300 new active investors each month.
That's pretty darn good. And I'm curious, the average first tranche of capital a new investor puts in each month is about what?
Yeah, first time investor. The average investment size is $45,000.
Higher than I would have thought.
Yeah, minimum is 25K on our platform, but you can imagine many investors might start 25 or 50K. They can maybe move up to 100K in certain investments.
Interesting. All right, let's wrap up with the famous five. Number one, favorite business book.
Oh, favorite business book. I think it's the John Doerr OKR, Measure What Matters. Just because in the last year, in terms of, getting better at executing, myself and my team spent considerable time reading that book and trying to kind of build our own OKR methodology.
Number two, is there a CEO you're following or studying right now?
Yeah, one that I always find intriguing, he's a character, which is Elon Musk. Just the things that come out of his mouth, the innovation that he espouses, is pretty amazing.
Number three, what's your favorite online tool for building your company?
Yeah, I think one that we've really coalesced and I love is, and it goes back to a little bit of our methodology, is Trello. Trello's been very valuable for everybody.
Number four, Tor, how many hours of sleep are you getting every night?
Oh, I'd say 6 to 7 is the average.
And how old are you?
I'm 50.
50. And what's your situation? Married, single, kids?
Married, 2 boys, 14 and 17-year-old boys.
Oh, that's great.
Freshman and a senior this year.
That's great. All right, last question. What do you wish your 20-year-old self knew?
I think it's an interesting question. I think if I reflect back, because that was a ways ago, I think the thing is it's okay to fail, right? If you learn from that and become better. And I think as a 20-year-old coming out of school, out of college, especially, kind of early 90s, there was the mentality is you don't fail, right? It was that, you do it this way, you learn, it's not okay to fail. And I think being an entrepreneur over the last, 15 years of my career now, and I wish I did it earlier, which is you learn from those failures, and it's okay if you've given everything you had and you did the best you did, and then it's okay to fail.
Guys, there you have it. CrowdStreet did 9.9 million in 2018, on track to do 20 million this year, split between 20% SaaS revenue from 200 developers paying $25,000 ACVs to list their properties on CrowdStreet. The other 80% coming from 3 or 4 marketplace products where they take, either, call it 100 to 200 points on to drive that growth. Healthy growth, 13 million of the company so far, burning about 100 grand a month, 75 people, 11 engineers. As they look to scale, they've deployed over $900 million in capital into these projects. Investors can get started on the platform accredited for as little as $25,000, but average first-time check is 45 grand. Again, healthy growth. Tor, thanks for taking us to the top.
Hey, thanks, Nathan.